Hello, I'm Gavin Suter. I'm the editor of Business Insurance, and I'm here today with Steve Bauman, who is Global Programs and Captive Director Americas for AXA XL. And he's here today to talk about captives in the current hardening market. Hello, Steve.
Hey, Gavin, how are you? Good to visit with you today.
Great, excellent. So glad you could make time for us. The current challenging market is causing some problems for commercial insurance buyers, whether it be increasing rates or finding a difficulty in filling out their programs, or they're being told they have to take a higher self-insured retention. And we're also hearing quite a lot about how captives can help solve that problem in some way. So for people who are new to captives, what sort of relief can a captive offer in this current market?
Yeah, I think I've been working with captives and for really my entire career, for over 30 years. And I think the old adage is still very apparent that, captives are for the long term, right? They're long-term vehicles for risk management. And, with that, it's important to think of and strategize about the risk management of a company and how might a captive fit into that. And so, I think the due diligence around, captive utilization is important to understand that. And particularly in firming markets now, the time to kind of set up a captive is in a soft market, right? When you have time and you have maybe some extra collateral and surplus sitting around and you're not paying it to insurance companies, that's the time. Now, when the hard market or firming market kind of comes upon us, that's the time to use a captive and use it effectively. And I think you're seeing a lot of folks, a lot of insurers using captives effectively now in these firming markets.
And if you didn't have the foresight to set up your captive in the softer market, is there anything to stop you doing it now? It's
no. I think a challenge though, right? It's more challenging to kind of because you're kind of jumping in the race when it's already started, right? So but there's companies with the wherewithal to do that, and I guess no time is too late, to get started and kind of plan out your long-term risk management strategy. So, I think for those companies who want to think longer term about their risk management, and I think that's most companies now, I think captive is a great vehicle to do it. And now is as good a time as any. And, when and if things soften up a little bit, even better.
Great. And how do you, obviously every risk is different, every company is different, and they have different risk profiles, etc. How can a risk manager know whether a captive is right for them and their organization?
Yeah, and I think that diligence process is so important. Every captive, goes through a feasibility process, that is required by the regulators who regulate the captives in the various domiciles. So through that feasibility study process, that's the due diligence. And you kind of, in that process, you model what your captive is going to look like, what you're looking to put in your captive to start it up. And you use the data and the analytics around that, to make sure that it fits. And, your most recent history of a company is important to kind of use that data and see how the captive would have functioned had you have a captive, let's say, in the last, 3 to 5 years. And that will give you a good indication then of, moving forward, how effectively it could be for an insured.
So you look at your own claims experience over the past few years and say, what if I kept a certain amount of that on my own books, as it were?
Yeah, and also, you work with your partners to get additional data that you may not have as an insured, but maybe industry data that it might be relative or competitive type companies that have some type of additional data that might work for you. And I think that's the importance of kind of when you're looking to form a captive, working not only with your captive consultants but with your other partners, be it reinsurers or insurers, and using their extensive amount of data to better model a captive for an insured.
And what about kind of like fellow risk managers? Is that helpful as well? Talking with your peers.
Oh yeah, and that's one of the things about the captive community. As big as it is now, it's still small in that there's a lot of good give and take that goes on, around the captive community. And I think you can find a newbie into the captive area can really find a lot of information not only online, but, just kind of reaching out to other risk managers who are very well versed in this area. And there's a great camaraderie and sharing of information that one can avail themselves to.
And when you do look online, I mean, there are some, it can be a little bit overwhelming looking at the different types of captives that are available. I mean, we talk about captives and often we're referring to things like single parent captives, but there's a lot of other options, aren't there?
There are, captives have evolved so much now, where there are protected cell captives and there are group captives, and there's a lot of alternatives. So, and that's kind of opened up the entire kind of marketplace for, much broader corporations to come into captives and even smaller companies using captives. So I think all those options, are worth a look. And if a single parent captive is kind of works out not to be, the choice, maybe it's a cell captive or maybe it's a group captive. But I think that's one of the benefits now for insureds, that there are so many options that they can avail themselves to, that really makes it, a nice avenue to take.
And obviously, it's as you say, it's something which you have to think about for the long term. And that means, you also have to talk with your internal leadership about it. How do you kind of go about selling this concept to a CFO or a CEO? The whole notion that you may have been used to offloading the majority of your liabilities to an insurer, but now you're going to be retaining more of them. And not only that, you're going to be running your own internal insurance company. That can be quite a big ask for especially a company that may have a risk-averse executive suite.
Yeah, I think you boil it down to the basic. A captive is just a tool, and it's a tool for risk management to be better. To use that tool, you've got to do the proper study, the proper risk analysis, and the feasibility study of it. But I think if you can, and the simple concept of kind of preparing for the future, I think is, in everybody's repertoire. So, that's what a captive does. It just allows you to prepare for the future. And if you really want to get really basic on it, if you think about your own personal life and having your own, everybody knows, everybody that drives a car has automobile insurance, right? And so if you think about taking a larger deductible on your own personal auto, that's going to save you money. Okay. But the way to be prepared for that is to maybe keep a little bit more money in your bank account. And that's really what a captive does, in the very, very basic sense of things. It prepares you for the future in adverse loss history.
And when you are looking at the captive, what are the kind of some of the common kind of types of risk that people start with when they set up a captive?
Yeah, and I think feasibility study, it's important, and I think a lot of folks now kind of start off on a narrow path with their captive, and just to get it up and moving. But now I think we're seeing so many different risks go into captives. I know we as a firm, we're writing over 27 different lines of business into captives around the world. And so it's really exploded the breadth of coverages that go into captives, and there's really nothing that's not going into captives. Our kind of bread and butter type policies are kind of the larger like global property programs or U.S. liability programs. But having said that, we're seeing, we see programs in the construction area, we see programs in the marine and transit area. We've got a sister company that does employee benefits into captives. So, it's I guess, you as a corporation, you've got to kind of look at your risk profile and see maybe where you need the most help and focus on that and see where you're going to have early success, and then, start to build the captive up from there.
Great. Well, thanks very much for joining us today, Steve.
Well, it's my pleasure, Gavin. A lot.
Great. And if you'd like to learn more about captives, visit businessinsurance.com and take a look at the World Captive Forum, which launches at the end of February. We have a very extensive program looking at all aspects of captives, and it's going to be a virtual event. Thanks very much.